How to get started with real estate investing with no money. It is said that there is a lot of money involved in real estate if you make the right decisions at the right time. But is it for everyone? There is no harm in trying, is there? Let us take a look at a few ways to get started with real estate without the actual need to invest any money, or quite little of it. Number 10. Hard money loans. Ever heard of bridge loans? It is basically the same. If you have not, let us dive into it. Hard money loans or bridge loans are basically loans that are extended to an investor by an individual. These are short-term loans for financial purposes. The loan is based on the property and value of the property. The loan generally requires 20 to 30% of the total value as down payment, but some lenders do provide the loan at 10% down payment. These last for just 1 to 3 years, which makes it a common way to collect money quickly. Number 9. Online investment platforms. If you are looking at investments which seem way too expensive to be taken care of alone, while this involves some investment, it is almost negligible. Online investment platforms pool funds from different investors for real estate purposes and then invest it on their behalf into expensive opportunities. This is available for both residential as well as commercial properties. Also, the investments can be for a single property or a portfolio filled with multiple ones. The only downside is that this is not a quick option and it suits best for investors who are willing to leave their investments uninterrupted for an extensive period of time. A few examples of the same are Scriptbox, Wealthy, and Grow. Number 8. Real estate wholesaling. Here is another option for those who are looking for less investment. Real estate wholesaling is a form of property flipping. This is when the wholesaler or investor purchases a property that they believe is underpriced. They sign an agreement to do so, and then sell the property further to an end user, making profit after the sale. This method is perfect for beginners who are looking to dip their toes into the fresh waters of the real estate industry. It offers the opportunity to gain incredible insight and will also help polish negotiation skills, which will prove invaluable in the industry. The income here is in the form of profit that is received after the sale of the property to the end user. It is usually a percent of the total cost of the property. Number 7. Real estate investment trusts. Real estate investment trusts, or as they are commonly referred to, REITs, are companies that help investors to make debt and equity investments. This is focused solely on commercial real estate. It offers around 7 to 8% of annual return. It was introduced in 1960 with the intention of enabling investors to invest in real estate as an asset class. Today, it helps small and middle-level investors. The investors who invest in real estate investment trusts hold their shares and earn income in the form of dividends. Of course, every investment performs differently, and the returns vary accordingly. Many believe real estate investment trusts to be the future of the Indian real estate industry. Even though an investor may not be able to buy an entire property himself, they will be able to invest in multiple assets and reap the benefits from his various investments. This method of REITs is used for long-term goals, growth, and income. Number 6. Real estate mutual funds. Instead of investing in a property, a suitable option for some might be investing in real estate mutual funds, wherein the concept is similar to that of the regular mutual funds, where the company owns the investment that it makes and the investor holds a portion of the mutual funds. Real estate mutual funds are a very efficient way to grow and diversify an investor's real estate investment portfolio. The kinds of properties these funds deal with are not limited. It deals with commercial, residential, as well as industrial properties. It included investment in real estate investment trusts, stocks of real estate, and also purchases, which are made directly. Investing in real estate mutual funds is the best option for small investors who are not looking to take huge steps in terms of investments in real estate. The earning from this method varies because of all of its determinants. These include factors like market conditions, interest rate, and supply demographics. So, if you are looking to make a small investment to enter the real estate industry, but are not looking to purchase a property directly or make huge investment decisions, this is the perfect option for you. It also comes in handy where expensive cities like Mumbai and Delhi are concerned. Number 5. Microloan. You don't have to worry about getting started in real estate, as new financing techniques have opened up the market for real estate firms to benefit. As their name implies, microloans are typically oriented towards startups or more unique enterprises in need of capital to expand. Financial institutions give far larger loans than microloans. As a result of the lower balances, the qualification standards for these programs, such as credit score, will be less strict. A microloan is a good way to invest in real estate when you don't have any cash on hand. Number 4. agent for lease. Try becoming a leasing agent to generate money while studying the business if you want to become a rental owner someday and don't have the funds. As a leasing agent, you assist in matching tenants with rental units in exchange for your time. You are compensated with a fee ranging from 50% to 100% of a month's rent. That is amazing and profitable too. This business model is ideal for aspiring landlords since it teaches you how to discover and evaluate tenants, which is an essential skill. And you do it all while making money and putting yourself in very little danger. This is the best way, isn't it? In most situations, becoming a leasing agent entails working for a property management business. You might also get your real estate license and approach individual landlords to help them find tenants. We can assure you that this is a valuable service. So, don't think twice, just go for it. Number 3. Creating partnerships to invest in real estate for a small sum of money. Real estate partnerships are a popular way to get into real estate with little money. If you would like to invest in real estate, but the price tag is overwhelming, an equity partnership might just be the answer. An equity partner is someone you invite into a deal to help fund the property. There are various methods to form partnerships, but it is up to the partner and buyer to agree on a more feasible structure. And if you are successful in landing the deal, then it is a win-win situation for you. Number 2. Investing in a live-in property. Have you seen any of the TV series about house flipping? Have you ever wished you could accomplish anything like that for yourself? Turning your property into a flip is one of the most effective methods to get started flipping. The live-in flip is the name of this strategy. It makes use of one of the most lucrative tax rules available. It works by purchasing a home, relocating, and staying for at least 2 out of 5 years. Then you can sell the house for a profit and avoid paying taxes on the proceeds up to $250,000 for a person and $500,000 for a married couple filing jointly. That's a lot of money. How long would it take you to make that much money after taxes? And like any approach, it isn't without effort and risk. However, you can lower your risk by delaying repairs and waiting for the ideal time to sell because you reside in the house. Number 1. BRRRR strategy. BRRRR means buy, remodel, rent, refinance, and refinance. Acquiring fixer-upper properties, remodeling them, and boosting their value are all part of the process, just like flipping houses. Rather than selling, you decide to keep the home as a rental and refinance to get part or all of your money back. When you're attempting to expand your rental property fast, this strategy comes in handy. Rather than running out of money for upfront payments on several properties, you can strategically refinance to get cash out and reuse the funds to buy various properties in a row. Many investors have benefited from this strategy, which they have utilized for a long time. So, we have learned from this video that it's not always true to follow conventional thinking. If you have cash on hand, it will be much easier to get started in real estate. And if you want to achieve financial independence as quickly as possible, you will need to save a significant amount of money. However, as we can see in this video, people set up their businesses with very little money in every industry, including real estate investing. Many of them get it off the ground just by having a big dream and putting in a lot of effort. So, best of luck in your upcoming endeavors. So, guys, that is for today. We hope that we have been helpful to you in any way. If you like this video, then please hit the like button. Also, if you want to see more of our videos, then smash that subscribe button. We will come back with another video. Until then, take care and goodbye.